Good morning, traders. It is 8:01 a.m. Chicago time on Friday. Happy Friday, 23rd of January, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Some interesting news overnight. I'm sure many of you have heard Saudi Arabia's King Abdullah died yesterday. The new Saudi king is his name is Salman, and is expected to maintain policies of the predecessor. Oil had a pop yesterday on the news, pop higher on the overnight session on the news, and has actually paired its gains since then. Crude oil is trading at 45.95, 45.96. Down almost 0.75% from yesterday, almost 1%. Major Eurozone PMI data came in. It's pretty much mixed, but the markets really disregard that information and are holding on to the valuation caused by the QE announcement yesterday. I did not do a trader bite yesterday. There was just too much activity in the market, and I kind of need to prioritize that. Otherwise, I would not be very useful to you. I would not be a trader. So I just could not. I could not do a trader bite. Greek elections over the weekend. Very important to keep an ear out for this, or an eye out, or whatever your medium is. Greek equities have risen about 5%. The Syriza party leads in 6 polls. Its leaders running on a platform of not honoring commitments to the EU. This is a very interesting play, especially with the QE announcement yesterday. The fact that there's a lot of money coming on the market here, 720 billion euros, almost $1 trillion, and the Greek political situation is such that it could cause them to have to be removed. Also, France, now that QE has been announced, France has announced that it cannot meet its employment mandate or its employment commitments to the EU, which is interesting because now that they know that there's all this money coming in, really, what's the incentive for meeting prior commitments? I think it's a very, the point being, it's a very tough situation for Draghi and the European Central Bank. Bank of Japan's Governor Kuroda says there's really no technical limit for easing policy. Again, the great currency wars that we're witnessing here. It's a quiet, consistent war between different central banks. No technical limit for easing policy. It reiterates policy maintained despite near-term inflation outlook, but can adjust policy based on inflation expectations. These are comments coming out of Davos. And then finally, ECB's Weidemann says he's not in favor of the new ECB QE program. It'll be very challenging when rate hikes are needed. Looking ahead at 8:45, 15 minutes into the open, we have U.S. January preliminary market manufacturing PMI expecting 54.0. At 9 o'clock, we're expecting U.S. existing home sales of 5.08 million. And then at the same time, we have the leading index at 0.4%. And then at 9 o'clock also, we have BOE's, Bank of England's Carney in Davos, releasing comments. That's what's on deck for today. Let's take a look at the technical picture here. This is the overnight chart. This is a 24-hour chart, and the way the way we finished yesterday. I did not do a trader bite, but I did tweet out that the key target above would be 2060. If you recall, 2060 is the is a very important area. 2060 is carried over, and it's the upper balance. If we extend this MC out, this profile out, you'll find that it's clearly, it's very obvious where that 2060 comes from, and we're back here. 2060 is the last frontier before new highs. I still believe and still stand by the idea that we're likely to take out this 2088.75 high, double top, weak high, very poor looking profile up there. Very weak action on the seller side, even though we have dropped quite a bit. But here we are, 2060. This is the MC point of control. There's that black line. This composite starts on the gap day of October 31st, been carrying it forward since then. Actually, I need to include yesterday's data. And you could see how we have been participating on these levels. The key area below was where we essentially started yesterday, down at the 2030 to 2025. That we've been battling this area very much over these past 3 weeks, and then we've moved into this lower peak, but deeper high volume node, and we have broken away from it. That's basically where we were yesterday. You could see that yesterday's profile created pretty heavy volume down there, pretty much most of the session until the last hour, and then on the last hour we broke through and have pushed right up against the next high volume node. This and you can see here we pushed into the 2061. As I talked about, and we dropped immediately right into the middle of this high volume node. The point being not to sit here and say, see, I'm correct, praise. It's not that. Don't get me wrong. My point here, and the point of these Trader Bites, is to organize the information and understand what the big picture is doing. So there are several ways to do that. The traditional way is to open a weekly chart, then open a daily chart, then open a 60-minute and read the market top down or bottom up in your analysis. What I like to do is have that, but actually use these micro composites. They're very important in balance zones to show what the market's doing longer term and where the volume's going off. It's great that the market might trade a price like 2088.75 on the high, but the more important question to me, and the more significant piece of the puzzle, is how much traded there. So having, and that's what fat tails are about. Having negative or positive kurtosis in statistics, it doesn't, where the volume is taking place is a key element to how I see the market, and I think how the market should be seen. Those folks in the pits used to get that feedback visually, and through other senses. They can feel the intensity when certain prices come along. They can hear the pit start roaring and getting louder as we reach these high volume nodes and low volume nodes, when participation has an edge, and here we represent it through these volume profiles. This is the point of these Trader Bites. So I just want you to think about organizing this information. There are many ways to trade. This can be combined with all kinds of things, whether you use stochastics or mathematical things like pivots and things like that. You could still integrate this and see what kind of confluences you can create, and I think it provides, in my opinion, provides a better edge. At least as you increase your size as a trader, this becomes much more important, because when you increase your size or trade bigger size, you have to have a much higher level of conviction, as opposed to trading 1, 2, 3, or 4 lots. Not that 3 or 4 lots are not significant, but still, you have to maintain a high level of confidence, conviction. Having this background helps support that. It's not the end all, but it's a good way to go. Anyway, That's just my review of what this is all about. But what we've done is we pushed 2059 quarter, so we stopped 3 ticks ahead of the 2060 target, and we closed. And the way we closed, if we switch back to the 15-minute, I have 3 more minutes of talking to do here. When we switch back, we'll see that, excuse me, that the point of control moved. See this pink line here that tracks where the point of control has gone. And we can see the point of control moved from 2039 or so, 2039.50, up to 2056.50 on the close. We have a double distribution profile with an LVN zone in between. Another way to look at it is through traditional market profile, and you can see here there's a single print at 46.75, and you can see that there is an excess here. These are considered unfair prices. So the participants came up and tested these prices and just could not find any sellers at these prices, and it just zipped right through. This is a really important piece of the puzzle. So longs will have to be, in my opinion, would want to be careful being long below 2054 or so, because areas that have been zipped through before indicate imbalance in the way participants traded them, and also show that these are considered unfair prices. If they're unfair on the way up, there's a high chance that they'll be unfair on the way down. And we've pulled down there 52.25 now, and we're trading in the middle of that zone. So if you look at the overnight, you'll see that action. So I said 2054 right here. You can see that the market tried to poke in. Again, it's the overnight session, so it doesn't have the support of the underlying stocks, the 500 stocks that trade it, that value it. But you can see here it's a very forceful move down, and this is expected to continue lower. So my primary hypothesis for this morning is caution longs. The expectation is, yes, we might open and have an open auction in range in this thin zone, but there's some motivation I'm seeing. There's a higher chance of some motivation to kick in one way or the other, for sellers to step in and take it back to where value was initially perceived yesterday, which brings us back down to 2054 and targeting this 2039.50. And then there's also a good argument for responsive buying back towards the point of control at 56.50. In either case, if you're short swing, expect to take some heat. Notice the overnight high is up, and I wanted to point that out earlier, is up on the other edge of this high volume zone. So if you look at this, the 62.50, look at how it pushed to the other side, almost to the 63, which is the other side of this high volume node. Very methodical. This is a market that is trading using auction logic, and it's doing it very cleanly, in my opinion, as much as it chops around and frustrates people. But this morning, it's a toss-up because we're pushing the low with 15 minutes to go. The expectation is that momentum is likely to continue, and if it does, you're looking at 48, and then you're looking at 39.75 below for a target. If it does find support somewhere in between at that single print, again, 46.75. If it finds some support ahead of that, then it's likely to push back up to 56.50. So my primary hypothesis is a fairly noisy, choppy open. I expect the intermediate term players to be in here. I expect the opening swing to be in the 4 or 5 point range, and then I'm looking for which side does it break. This is likely to trade almost like an open auction out of range because we're opening in this deep, low volume or unfair price zone. So I'm looking for the break one way or the other. The traditional auction will likely take us back up to 56.50 and then start working our way up there. But it looks to me from the overnight action that the low is likely to be taken out on the open, and then we're likely to push down to that 46.75 first. So that's my primary hypothesis. The profile overnight is very balanced. 57.75, 57 is the overnight point of control, in line with yesterday's 56.5 point of control that was left behind. So we have balance here in both sessions. We did continue higher like we normally do. When we move, when we have a VPOC shift at the end of the day, we're likely to have a continuation. And I posted that on Twitter last night before leaving. I want to remind you again, it is Friday, not a fun day to burn a hole in your pocket and spend the weekend having a heartache about it. Just maintain your risk control. There isn't a single trade worth your account, your entire account. So pay attention to risks so that your mind is free to see the market for what it is. I cannot emphasize that enough. Pay attention to risk so that your mind is free to see the market for what it is. Otherwise, you're just sitting there having a conversation with yourself with the low confidence of not being sure whether or not you're just going to let a trade go and have it again take away 20, 30, 40, 50% of your account. Again, futures are leveraged. It's leveraged right now. Every contract of the S&P is controlling over $100,000 worth of equity or notional value. That's quite a bit. So if you're trading at a $500 margins, you're trading at a 200 to 1 leverage, it would seem. So be careful, and good luck to you. And if you have any questions, again, my website's futurestrader71.com. There's a contact box up there, and hit me up and I'll do my best to respond. Take care.